in terms of Russia's actions within Ukraine. So I've been slightly back-footed, but I've already been expecting a global slowdown in the economy. And so I've been starting to position that way by buying bonds, some gold, some dollars, that kind of stuff. But let me talk about what I'm seeing now, how I'm thinking through this current event, and then some of the ramifications. It's been a story that the Russians have had an obsession with in how they want to deal with it for their own sovereign protection. And I don't want to go into the geopolitics of who said what to whom and why. That's not relevant right now. What's relevant is trying to figure out where we are. So I think we have a very narrow window, maybe 2 weeks, maybe less, which is that the Russians have surrounded Kiev pretty much. Now, we understand that the supply chains are not good, but we also understand the Russians have done this a lot of times before with bad supply chains. It's pretty common, and sheer brute force is how they do it. So then you can understand what is propaganda, who you're being told by what person for whatever reason. The issue I have with all of this, and I had underestimated it, is the knock-on effects are much larger than I first realized. That how things can spiral in very few decisions into something utterly terrifying that we've not had to face, certainly in our lifetimes, and certainly not in the West. Other regions have, obviously. So it's kind of on tenterhooks. The next 2 to 3 weeks, we will find out whether we have scenario 1, scenario 2, and then after that would be, will scenario 3 come into play? Everybody has now learned that the dollar is a liability and not an asset. So, i.e., dollars can get taken away from you at will. So even though it looked like a very smart move to weaponize reserves and the financial system, what is actually happening is you are now forcing the de-dollarization of the world. Now, my view on that is that's a slower process. Obviously, Russia just got thrown out, but they've been planning for it. Let's be absolutely clear. Russia's been planning for it. They probably didn't imagine it this fast, this apocalyptical, but the Chinese will be planning it too. The central bank digital currency is part of that planning. So everybody wants to move away from the dollar. And right now, the instant thing that any central bank can do is own more gold. So I think this is a very bullish gold environment for central banks because that's what they do. It's an asset that they're comfortable with. Obviously, all of these trends are very bullish for Bitcoin particularly, but the crypto world overall over time. Now, crypto trades both as a risk asset and a store of value. The store of value element is becoming predominant right now and very clear. The risk aspect, well, it's a bloody risky world out there, so let's wait and see. But the world is a net debtor in dollar terms. And the more of these debts you start writing off by forcing people out or seeing defaults, the higher the dollar goes. And the dollar is a big risk here. So if you get a liquidity squeeze, the dollar goes up. The dollar's the one thing that I'm looking at, but we also know that the Fed try and stop that because they know the dollar is the wrecking ball. They can't let the dollar go up too fast, so they start supplying the world's banks with swap lines. So every time they've done that in the past, it's eased the issue. But here you've taken out a very big economy. I mean, Russia's gigantic. Russia probably has more natural resources than the rest of the world added together. It's something of that magnitude. So the GDP may not be big, but its asset base is enormous. And without that in the world, we end up with a huge loss of trade. And we've also got these dollar liquidity issues, which I think will bite the Europeans, bite the US, and bite everybody else. So I think that's all setting up to be a bit of a mess. The Fed will come in and try and flood the market with swap lines. So the money printers start in different ways. And I know there's a lot of people who watch this go, well, that's not money printing. It's enough to start changing the denominator effect of certain assets. So